Yo, what is good, traders? Hopefully you've all been having a great trading day. It's been a while since my last video, and that's just because I've been away. So I typically don't like to trade as much when I'm in like holiday mode, and that's just because I'm not really taking or paying as much attention to the charts as I should. I'm doing other things, and I think it's bad discipline. So I typically like to step away and wait until I'm at home, back on my desktop, and I'm back out of holiday mode for me to really go ahead and start attacking the charts again. So I thought it'd be great to start off with gold, just because from my past videos, I have been doing detailed breakdowns on what my kind of views are on gold and how it kind of has been trending over the past couple months. Now, gold did exactly what I thought it was going to do, and you can go back for my previous video to go ahead and see what I was going on about. But I was basically going on and saying that gold no longer was on his 2k shiny metal, and we was in fact going to be a lot more bearish than bullish. And let's just quickly go back on the 4 hour and just pick up from where I was from my last gold breakdown. So what I was saying was I felt that we was likely to either come up to test into this 1905 area, or we was going to test into this 1920 area, which again, these were areas of resistance, and I felt they was key areas, they were daily areas of resistance. So I felt it was likely to get a reaction from these types of areas. Again, we had the moving average, but it was just kind of holding down gold from really going ahead and breaking out past these levels. So it did just test in, pull back, and I wasn't trading. And for me, I feel like I go through phases where I'm very sometimes inconsistent with my trading, in a sense where I will analyze the charts more than I actually go ahead and take entries within trades. And sometimes that's because, well, I feel for me, my psychology part of trading is very, very important to me, and I feel like if my mind's not in it, I'm best off not trading. So I just typically analyze charts instead of going ahead and entering the trade. Now, that's not a bad thing. I think that it's one of my weaknesses, for which makes me not as a great trader as I can be, but it's something that I've been working on over a number of years. And yeah, it's just my personal downfall, but you know what, that's my weakness that I can say that I have, and it's something that I'm working on in order to become a better trader. However, that doesn't say that my technical analysis isn't great, because if you was to go through my other trading videos, you would be able to see the majority of the times my strategy does work. Now, as a lot of you should know by now, trading is of course 80% psychology and 20% strategy. It's the hardest part in trading, and typically I think is something that I've been trying to put a lot more work into in order to kind of just tip me over that edge to be more of a fully consistent trader. And that's not to say that I'm not consistent in the terms of my trading profits, because I would say I am a profitable trader. However, consistency in terms of me actually going ahead and turning up to the markets every single day and actually taking trades. Now, what I mean by that is not exactly trading every single day, but just actually trading entries off areas which I've marked out. Like there'll be some trades, for example gold, where we'll have markups where I felt gold's going to react into, or gold's most likely going to get sells into. However, I'm just not feeling in the like the mindset to actually go ahead and take the trade, so I don't take the trade. And more times than not, it does actually play out. Now, after, what typically happens is, because I've kind of missed my entry, I will then go ahead and chase my kind of position, and that's what typically ends in more of a loss, because you're revenge trading. And I feel like that's a really, really toxic way to trade, and I feel if anyone is in that type of mindset, it's best off to really just maybe either just do tiny lot sizes, or just go on a demo, or just do an FDMO, like for the sake of it. It's like £100 or whatever. Just do an FDMO and just see if you can test yourself. Like draw out like a checklist of exactly what you want to go ahead and achieve within the markets, and then see over like, you know what, even FDMO has a 2-week trial that you can go ahead and do, and I feel like that's very, very, they have really good conditions, where it's pretty much like, even though it's simulated, it's basically like a a real simulation of like proper market conditions, and doing like approaching trading in that way, it's just a lot better for you to go ahead and actually like mimic like or get real results. So I think like going ahead and doing it that way, it's just a lot easier. It's a lot more like authentic than actually just doing like a random demo account or just doing like a little account flip. I think FTMO is a good prop firm for going ahead and doing that type of trading just to get better, really. And so with that being said, sorry I've been rambling on a little bit, let's get straight back into kind of gold and my kind of envisions on gold for the next couple weeks and where I kind of really see price going in. So we did actually get a touch into my potential reversal, and when I mark off my potential reversals, it's typically based on looking at supply and demand. Now, as if you might know from a few of my other videos, the way I treat supply and demand is different to support and resistance. I treat supply and demand as levels of areas of interest for institutions and other banks and stuff to kind of go ahead and get into the market. That's just because where they're just trading with higher capital, it's just easier for them to trade areas which have had reactions from in the past over typically months, years, etc, etc. Now again, this is not an exact science, but it does help to look at areas which have had, again, clean reactions from in the past to kind of base a level where banks or institutions are most likely to go ahead and buy off. And I felt this level, this 1790 level, was a level which that was likely going to be a reversal area. So again, we have actually rejected this area quite nicely. Again, this doji candle kind of confirms that this is a level of interest for potential buyers, or is it a potential area where the price is just kind of breathing before making the next leg down? If we look at the RSI, there's definitely some signs of hidden divergence, so it kind of shows that it could most likely be a rest phase. And especially if we look at the trend line, the trend line which I said was not likely to be broken seems to be broken, so it could even be a break and a retest, though I will be waiting to see the types of reactions we have around this level. Again, it depends on structure. Now, one thing that I will say, and it's very, very true, is the way you can identify if a trend is actually going to be reversing is by looking at structure on smaller time frames. Now, if you go ahead and look at how structure has been moving, for example, I could say this is definitely a breaker structure, just simply because we had the low, and then instead of making another another lower high, we actually broke the previous lower high and actually made a new high. So for me, that's how I indicate whether structure is breached, and in this scenario, structure has actually breached. So on the smaller time frame, we can say now we are looking to be more bullish than bearish. However, if we was to go on to higher time frames, we can still see that the time frame alignment is in fact still bearish. So what do I feel gold is going to do? What I would like gold to do, if I'm being honest, I'll probably look to see how we hold on the 0.5 fib retracement. Now, if we hold in this level, if we hold in between here, and let's see if that lines up. If we hold in between here and we kind of get something like this, in that case I would potentially be looking for longs, just because structure would be kind of telling me that, alright, cool, it looks like we're slowing down, this is potentially the bottom, and then we're kind of looking to maybe push up to the 1900s, depending on how bullish gold wants to be, and maybe with oil now picking up, and that's what you go see, oil is pumping, so there's been this weird correlation with oil and gold as of recent. So I feel like as oil keeps on pumping, then it's likely for gold just to follow suit and also pump higher too. But you know what, we just have to see, we'll have to wait for price action, and with that being said, structure is always king. So really what I'll be doing is I'll kind of be waiting for structure to kind of play out more, but I can either say if this level rejects and then we do make another low, then we'll probably continue bearish. Though if we do actually start making higher lows and higher highs, then you know what, it could be actually said we maybe have found a bottom and we are now looking at longs gold. So it will be all dependent on structure within gold, and yeah, I will keep you updated. So hopefully you found this video useful, and I will catch you in the next one.